Welcome to the second video. This video is completing the income statement and the financial position statement for Workout Works, the 5 credit external level 1 accounting. We're going to start with the income statement. The income statement is income less expenses. So in the income statement here, we're going to type income. Every business has one item of major income, and for Workout Works, the major item is memberships fees received. Because it's a major item, the figure goes right in the far column. A much easier assessment, this one, where we don't have cost of goods sold. The other type of income we have is called other income. Remember to press pause and catch up if you need that chance. Other income, we have 2 of those we've already done the hard work on. Dividends received and equipment hire received. And we'll add those 2 figures in. A total, either auto sum or just add them up. And we'll get a total income. Pretty important figure for any business to have a look at. Then we're going to go less expenses. When we're doing this, we'll just find the question, and the question tells us not there, the resource booklet tells us how we are to classify these. And so they are gym cost, administrative expenses and finance cost. So the first one, it also tells us do not abbreviate. If we abbreviate, we lose marks. So the gym costs, we're going to take anything that has GC next to it here. Advertising, fitness instructors' wages, gym cleaning, gym rent, gym supplies used, other gym expenses, and the depreciations. These depreciations are good because they give us merit and excellence marks. If we're doing it on Excel, we can just fill across. If you're doing it by hand, you have to obviously type each out one at a time or write them out. Don't forget your calculator. First one done, gym costs. Second one is administrative expenses. Note that this is underlined because it's a heading. And we take all our AEs on the side. Again, each one is worth at least a mark, and you have to have over half of them just to get achieved in this. So it looks like I've got 5 there. Office expenses, office salaries, stationery, telephone, internet, and the depreciation on office equipment. Again, add them up. Press pause if I'm going too fast, catch up, and then press play again. Last section we have is financial costs, and we know there's only one of those, and that's our interest on the loan. Because there's only one, that becomes the total, so we put that in the second column. Total expenses, key figure, we'll add them all up. The last part of this is the key part, calculating the profit for the year. And that's simply equal to your total income minus your total expenses. So in 5 minutes or less than, we've got a mark that will give us E8. Here, it's not very high, is it? Only $11,000. I'll be disappointed with that. Now we work on the balance sheet. When we do the balance sheet, I'm just going to hide this because we won't need this till the end. Right. So we're going to do the note to the statement first, and then we're going to do this part here, which is the financial statement after that. You'll see they've already given us some things in the assessment. That's the titles here, which is quite nice of them. So what we need to do is this part first. So we're going to write in there the historical cost. Cost is probably right as well. The accumulated, which just means added up over years, depreciation, and the cost minus the depreciation is equal to the carrying value. Right, so the cost of the exercise equipment is that one. That'll give you an excellence because we had to add on the amount that you bought for the accounts payable part. Gym fixtures and fittings, 41,600, and office equipment over here, 6,200. The depreciation, accumulated depreciation, each of these will give us a mark. That one's probably a merit mark because we got told the figure. This one will be an excellence mark because we had to calculate it times 12%. And this one's excellence, we had the residual value on that one. Carrying amount is equal to what we bought it for minus the depreciation, or accumulated depreciation, how much it's dropped in value. And luckily, we can just fill that across. And then I also want to auto sum the figure that we're really after. You'll see that one there. That will go into the statement here. These ones here are really important. You don't forget these. These are 3 really achievable achieved credits, and we need to get, as I said before, over half to get a pass in this. So we're just typing out what's in the statement. So depreciation is calculated on the following basis. So we're just going to check back in our resource booklet, not that one, this one, and we're just going to copy these ones out. I wonder if I can copy and paste. Well, we'll go exercise equipment. Oh, nice. And it's really nice to get marks just from copying. And the office equipment. Good, so that's 3 easy. Achieve marks 1, 2, and 3. Then we do the financial position. Remember, this is assets minus liabilities gives us the equity. So we're going to start off with assets. And the first asset we work through is current assets. Probably should underline that as well. And we just find our current assets. So anything that says CA over here. Oh, not that one. It's actually a gym cost. Try again. Current assets. Petty cash looks to be our first. And we've got one other, and that's our gym supplies on hand. These are supplies that we've got, like inventory, that we haven't used. So we can grab all of those and bring the figures in. Then we've got a total of those. And non-current assets. And remember, there are 3 headings of non-current assets. The first one is property, plant and equipment. Again, make sure you don't abbreviate. And we'll go carrying amount. And type note 1 or write note 1, referring to this part over here. And because there's only one property, plant and equipment, it goes in the second column. Do you remember our other two non-current assets? We're starting with I. A lot of work here for not much in terms of marks, but pretty critical to get it to balance at the end. Got your goodwill, and you've got investment assets. And those shares. So now we've got 4 lots of assets. That'll give us a total assets. So these are things owned by the business. We'll just auto sum those if we can. So assets first part done, less liabilities. And again, the first one's current, underline it. And there's quite a few, anything that says CL over the side, I've got a few of those. GST will give us 2 excellence marks, I believe. Bank overdraft, GST payable, accrued expenses, revenue received in advance, and accounts payable. And because we've taken them, we can fill across and get a total current liabilities. A lot of marks in that one. Our non-current liabilities. Usually there's only one. Sometimes it's mortgage, and in this case it's a loan. Note the date means it's longer than this accounting period, so it becomes a non-current liability. So we'll just add those two up, gives us our total liabilities. And do you remember what assets minus liabilities is called? Now that one I'm going to put a double underline underneath that one because we're trying to balance to it. On the home straight, last section. Now this is one you should remember. Owner's equity is capital. I'm just going to type them in. I could reference them across. Plus profit for the year. Less drawings equals capital at end. And it must balance with this figure. So capital at the start is over here. Capital OE. Our profit, this one's a bit trickier. We need to find it. Oh. And I've hidden it. So I'm going to unhide it. Profit is this small little one here. Note that our drawings figure up here is less than our profit, so we're expecting our capital to have gone down. Our ending capital is equal to our opening capital plus our profit minus our drawings, and fingers crossed it balances. This figure and this figure both balance. Stand up to your victory dance. Thank you very much.